This is the question. Are you making enough money to be successful in your business? Because your home inspection business could make a profit without being profitable. Huh? Yeah. If your business has made some profit, that means your company made more money than it spent. For example, you ended Q1 with profit. What is a quarter? Well, the standard calendar quarter for your home inspection business is Q1, January, February, March, Q2, April, May, June, etc. Those are your quarters. So let's say you made a profit in Q1. Very good. When you end a quarter with profit, that means your company made more money than it spent. But does that mean your company is making enough money to be successful so that you can make a great living? To answer that question, you should know the difference between profit and profit margin. They're not the same, and profit margin can give you a better idea of your financial strength than profit can. So let's go over some basics and general concepts, starting with profit. Profit is the amount of money you have after you pay all of your expenses. This is called net earnings. So take your total revenue for the quarter, the month, or the year, subtract total expenses, that's your profit. For example, suppose your home inspection company made $157,000 in Q1. Total expenses for Q1 were $130,000. Subtract your profit, your net profit for Q1 is $27,000. 157 minus 30 equals 27. Start with total revenue, subtract your costs, all costs and taxes. You get net profits or net earnings, and that's how you calculate profit. Now let's calculate profit margin, which will give you a better idea of your success. When you have profit, your business is in the black. It's making more money than it spends. But is your business making enough money, earning enough return on your expenses to be successful so that you can make a great living? One good way to answer that question is to calculate the profit margin or the profitability of your company. And to calculate profit margin, divide your net profit by the total revenue and you get a percentage. That's a number. That's profit divided by total revenue or gross revenue equals a percentage. For example, suppose your inspection company made $157,000 in Q1. The total expenses were $130,000. Your profit, net profit, for Q1 is $27,000. Now, divide $27,000 by $157,000 to get the profit margin, 17%. So what does that mean? That means 17 cents of every dollar of revenue is kept as profit. Now, is that good or is that bad? Profit margin is just one way to indicate the performance of your inspection business. Profit margin shows how much money you get return from the money you're spending, expenses. Suppose Big Ben Inspections last month made $25,000. It had $20,000 in total expenses. That's $5,000 in net profit. Subtract 25 minus 20, 5,000. Divide, that's a profit margin of 20%. Now suppose Little Nick Inspections. Well, Little Nick Inspections made big stacks of money, $125,000 last month, but it had $110,000 in total expenses. That's $15,000 in profit. Little Nick has a profit margin of 12%. Little Nick made 5 times the money, gross revenue, than Big Ben, and 3 times the net profit than Big Ben, but the profit margin was 12% for Little Nick. So what does that tell you? What it tells you is that Big Ben Inspections is a more profitable home inspection company. Big Ben's total revenue and net earnings are many times smaller than Little Nick's, but Big Ben is enjoying the bigger profit margin. He's getting a higher return on his spending. He keeps 20 cents of every dollar earned. Having a small profit margin for a home inspection business is usually not a good thing. The profit margin is a good indicator of long-term success of your home inspection business. This is because all sorts of unexpected things could happen to your business. An unstable economy, a dip in jobs, a market crash, increase in insurance rates, increase in rent, increase in spending, a global pandemic, and so forth. And all of these could cut into your profits. If you have a good, high profit margin, your company is better equipped to handle fluctuations in the economy, operating costs, and income. So therefore, you want to increase your profit margin. You want a high profit margin, and there are a couple ways to do that. You can reduce costs or increase revenue, or both, because those two things can help improve the profit margin. Raising revenue and keeping costs under control can improve your profit margin. Now, increasing revenue. How can you increase revenue in various ways, including raising inspection fees, adding ancillary inspection services, and simply doing more inspections by hiring more inspectors. To reduce expenses, to reduce costs, take full advantage of InterNACHI membership benefits, which can help save you money. To raise fees, you have to provide overwhelming value to your clients. To add and bundle ancillary inspection services, you have to diversify your services by attaining additional inspection certifications. And to do more inspections by hiring more inspectors, you have to work on your branding and marketing to increase demand for your inspection services. And all of these things that you have to do to be more profitable, to have a bigger profit margin, are all explained in detail in this class. This is the master class for home inspectors.